it's been a rough year to be a department store, no?
Yeah, absolutely. So overall, for apparel retailers in particular, they've really taken a beating this year. I think that has to do with some shorter term trends, but also some high level developments for the industry and the competitive landscape that we'll get to later in the show. But just to give you an idea, for example, Macy's down 30% year to date,
which you wouldn't have expected. But anyway,
and oh no, you're fine. So Macy's down 30% year to date. Kohl's down 28% year to date. Nordstrom's down 21%. Overall, actually, JCPenney is doing quite well at plus
the surprise winner.
32%.
They were being left for dead not 1.5, 2 years ago.
I think that's part of it. The beginnings of their turnaround are like starting to take hold, essentially. Right. And you have to keep in mind that
they're definitely the outlier.
They're down 80 to 90% from their highs in 2012 before
they were a $30, $40 stock.
$40 stock, exactly. Yeah. So I think that's a bit of an exception. But all four of these companies that I mentioned are actually reporting their earnings this week, which is why I wanted to talk about a little bit about just higher level what to expect and what investors should really be focusing on when their management teams are on their conference calls talking about their results for this quarter and just their guidance for the next year.
Okay.
So, for example, the stocks are down, obviously, due to a streak of underperforming quarters for most of these retailers. Also, we've had a lot of, in the news, big store closing announcements from JCPenney's, from Macy's, and some unfavorable shifts in consumer trends around people just buying more media or buying more electronics. Also, things like fast fashion, and also, lastly, even seems like the weather these days is stacked against these companies with a very warm fall winter that we've been having.
Right.